Right, let's continue. These are some objective questions which we are going to do now, and this is for topic 4, and it's related to accounting ratios, calculation and interpretation of accounting ratios for the exam IGCSE Edexcel exams. Okay, so number 10, a business provides the following information. What is the return on capital employed? This is quite easy. Return on capital employed is simply profit for the year over capital employed times 100%. Here we are told that the profit for the year is 7,500. Now the capital employed, we have to be careful. Capital employed, in this case, there is no non-current liability. So to find the capital employed, we use this famous equation. Remember, I told you total assets equals capital plus total liabilities. This capital, of course, is the closing capital at the year, and this is what we need. We need to know this. So total assets is 55k plus 15k. This capital, let's call it X. The liabilities is 10k. So we have on the left hand side 50, 60, 70k equals X plus 10k. By simple maths, X will be 70k minus 10k will be 60k. So the capital employed is just 60,000. There's no non-current liability here. If there is a non-current liability, it will be included in the capital employed. So your working is just 7,500 over 60,000 times 100%. Okay? And your answer is 12.5%, which gives you B. Okay? Next one. Okay, quite easy. Know the formula. Be careful, I repeat again. In this case, capital employed does include NCL, non-current liabilities. It's actually capital plus NCL. Now, a business provides the following information. What's the liquid ratio? Liquid ratio is just total assets, it's current assets excluding inventory is to current liabilities. So you include trade receivables. You don't have a bank inventory, so the only current assets is 45k. Please do not take in inventory. Your current liabilities will be the trade payables, 28k, plus plus bank overdraft, 7k. 5-year bank loan is a non-current liability. Bank overdraft is a current liability. Trade payables is a current liability. Trade receivables is a current asset. Inventory is a current asset, but in a liquid ratio, you cannot take up inventory. So it's 45k is to 35k. Okay? Take a calculator, work it out, and your answer should be 1.29 is to 1. Answer is B. Okay, one last one. A trader wants to improve his gross profit percentage. What do you do? Gross profit percentage is defined as gross profit over sales times 100%. This gross profit is defined as sales or revenue minus cost of sales over sales times 100%. Revenue or sales refer to the same thing. So what can you do? Okay, reduce admin cost, no, that affects the profit, no, for the year. Reduce depreciation of equipment, no, that will affect the other overheads. Reduce cash discount allowed. Cash discount allowed, no, it will affect the profit. You have to look at this. Reduce trade discount. Trade discount is the amount of discount that is given by the supplier to the business, to the buyer, and in order for him to make a profit. For example, if you have a listed price for a pair of shoes, $100, and given a trade discount of $40, so you only have to pay $60. You as the buyer of this pair of shoes will only pay $60. So the larger the trade discount, the cost will come down. The cost to us will come down. So my best answer is reduce rate of trade discount allowed. Okay, so we are done here, and in the next video we will be looking at the longer subjective questions.